And Casey's with Hanghold Capital Management, of course. And watching the debates the other night, you make the point, Casey, that one of the top concerns for Americans is paying taxes. And these candidates obviously have their tax plans. But really, it just drives home the point that in the future, you don't know who's going to do what with your tax rates.
You're exactly right, whether it's going to be in the next few years or many years down the road. It's just so hard to predict. So when you think about your investments, we all understand, I think, the basic principle of diversification, not having all your eggs in one basket. So you invest in different asset classes from U.S., large cap to small cap to international. But you need to do the same thing with your investments in providing yourself tax diversification.
And that would be, say, a 401k will be taxed when you begin to take the money out, as opposed to, say, a Roth.
That's right. So the benefit of the tax-deferred account like a 401k is you get a tax break. The money goes in pre-tax, and when you take it out in retirement, it's going to be taxed like a paycheck. But, yeah, there's Roth accounts. Those are tax-free accounts. You're going to have to fund those with after-tax dollars today, but now you're going to have a bucket of money you can draw from down the road that's tax-free. What you don't want to have happen is you have all your money in a 401k style bucket. What if tax rates are higher in the future and you go to retire? You need to withdraw dollars from it. If you're going to pay ordinary income tax rates all the time, like a paycheck, you could be forced in a very high tax situation.
Although I have to say, Washington really doesn't like to mess with the older folks because they tend to vote in large numbers.
You are exactly right, especially when it comes to Social Security. But changes, I'm sure, will be coming to that down the road, but that's going to be taxed like a paycheck. So you need to have money in different tax environments, whether it's a pre-tax like a 401k, an after-tax like a Roth, or it could be a brokerage type of an account. Today, capital gains taxes are very, very low. They're either 0% or 15% for most people. Again, while those rates could change in the future, you want to give yourself the most flexibility despite whatever Uncle Sam is doing. You can draw from those different buckets, and you can control the tax rate, the amount of taxes you're going to pay on those